Good morning, Greg Michalowski from ForexLive.com. Today's date is the December 14th. It is the day for the FOMC rate decision. Yesterday we saw the CPI come in weaker than expected at 0.1% versus 0.3% expected. Core measure also came in weaker than expected. That led to a initial move higher in stocks, sharply lower in the US dollar. US interest rates are lower as well as markets adjusted to perhaps a lower terminal rate. We'll find out more about that today when the Fed releases their interest rate decision. We expected 50 basis points. That's probably going to happen, or most likely going to happen. But the terminal rate will be of interest. The Fed at the last September meeting set the dot plot terminal rate at 4.6%. Will that go up toward 5% or just below that level? We will see how that plays out, and what their expectations for things like GDP, inflation, and the unemployment will also be released in their central tendency report. So a lot to be dissected at 2 p.m. when the Federal Reserve decision is made. Fed chair will speak at 2:30. So with that all said, let's take a look at some of the technicals that are driving the markets, what the biases are, and what the risk levels are going into that FOMC rate decision. Looking at the euro versus US dollar, what we notice here is that this swing area defined by different swing lows and swing highs all the way back here in the months of April and May and June, all came in near this level around 1.0615 and 1.06402. In trading yesterday, the price moved above that level on the dollar selling, but closed within that swing area. And in trading here today, we also moved above that swing area as well. But the low price today came in at 1.06183, holding just above the low of that swing area. So the buyers are trying to keep control here above that level in the short term. On the long-term chart here, if it can stay above that level, that would be more bullish here for the euro versus US dollar. If we move below that level, traders might give down to the low price that we saw here in the month of or the high price that we saw here in the month of November. That high price came in at 1.05943. So really between 1.05943 and 1.05156 are my levels to stay above if the buyers are going to stay in firm control, at least in the short term here, and not be bothered by the failed break above this swing area. On the top side, if the market should continue its downward trajectory for the US dollar, higher euro, the 61.8% comes in at 1.07468. That would be the next key target on the top side, and then we'll start to look toward these swing highs and lows going through here, coming between 1.0773 and 1.0805. On the downside, if we should break back below the November highs here at 1.05943, wouldn't be surprised to go down and retest the 50% retracement at 1.05155. The market traded between that level for every day of the month until yesterday, when the market broke had a low above that level, and then moved higher after the CPI data came in much weaker than expected. I guess it was much weaker than expected. One is plus 0.1% versus 0.3%. So that's how I see the euro versus US dollar shaping up going into the FOMC rate decision. For the dollar versus yen, the daily chart also shows some key levels. A key level that is in play, that is the 200-day moving average that comes in at 135.35, so 35.35, so a nice easy number to remember. Current price is trading below that level, 134.97, as you can see. So the bears are trying to keep control. We did trade back above that level, however, in trading here today, so trading above and below the level, and we closed above the level yesterday. So markets are trying to figure out which way it wants to go here for the dollar versus yen around that key 200-day moving average. In the month of early December, the price did move below that level and fell down to a low price of 133.619. That low was not approached yesterday or today. The low price here today came in at 134.49, so a pretty decent distance away from that low price here, about 80 pips, I guess. So that is there is room to roam on the downside if the market should continue its move in that direction. We'll get below that level and we start to look toward the 50% retracement of the 2022 trading range. That is the low back here in January, the high in the month of October here. We getting to and through the 50% retracement is a barometer that traders like to see if the sellers are to take more control. Or they also want to see the price move and stay below the 200-day moving average. It didn't do it here. It's trying not to do it here, or it's thinking about doing it here, but not quite sure just yet. So that's what traders will be focused on in trading through the FOMC rate decision today. Taking a look at the hourly chart, we do have a lower trend line here, cutting across recent lows. We have a couple points along the line through here that perhaps, and it's a parallel trend line or channel trend line here that may be of interest for sellers. If we get below that level, that would open the door for further downside momentum for the dollar versus yen. Let's take a look at the sterling versus US dollar next. And again, we'll focus first on the daily chart because some levels are in play. Here, one level in particular was the high price that we saw in yesterday's trade. Came right up to the 61.8% retracement of the 2022 trading range. That level comes in at 124.507. Is that going to be the peak for this currency pair in 2022? Well, that will be decided here today and tomorrow as well. By the way, we do have interest rate decisions tomorrow, including the ECB and the Bank of England and the Swiss National Bank. So that's something else to digest in the price action through the FOMC. But this swing area through here between 122.78 and 123.436 is probably going to be the deciding barometer or vote cast for the whether we break above the 61.8 between now and the end of the year or move back down perhaps toward our 200-day moving average at 121.07 going forward. This swing area has a number of different swing lows and highs coming in, starting back here where the price found some commonality between different highs and lows. Admittedly, we moved above it here, or maybe moved a little bit below it through here. But there is, I earmarked this area as a level of significance, and that was reestablished through here during the month of August, not to be returned to that level until this month when the market moved up toward that level and found early sellers both here and here, moved above it yesterday, closed above it, and is trying to stay above it, as you can see here in trading here today. So watch on the top side, 123.43 for the sterling versus US dollar. Stay above it, and we'll look for the 61.8 to get through that level, and then we'll start to look toward this swing area back through here as the next key target on the top side. And again, on the downside, if we move back below the 123.43 level, traders will then look toward the lower end of the swing area, 122.78. And then if we break below that level, we could wander down toward the 200-day moving average between now and the end of the year. We will see about that. Let's take a look at the dollar versus Canada next. That currency pair, I'm going to focus more on the hourly chart here. Why? Because the price is off of the lows here yesterday. The low prices yesterday came in toward this old high right through here and found some support buyers ahead of this swing area. So that was a nice little bounce off of that level. And in trading here today, the market tried to go back down toward that level, couldn't find the sellers through it, or to it, or through it, and certainly through it. And so the price started to move back to the upside, would move back above the 50% retracement of this last move to the upside as well. So on the top side, in trading here today, we're going to have the 200 and 100 hour moving averages that are going to be potentially in play if we get above the 38.2% retracement, the broken 38.2 and 135.789. The 200 hour moving comes in at 135.888. In trading yesterday, the market fell below that level and didn't look back, didn't get close to it. So we'll be watching that level in trading here today. The U.S. stocks are trading near unchanged in pre-market trading. The Dow is up 4 of the last 5 trading days. The S&P and NASDAQ are up 3 of the last 4 trading days. It seemed like yesterday was a down day, although the price did move higher. Pre-market trading for the Dow was like up 800 or 900 points, but only got up 700 points before closing the day with just a modest gain of about 103 points. The NASDAQ index rose 113 points. It was up much higher than that as well in trading yesterday. So it did seem a bit disappointing for those stock indices. So there you have a look at some of the major currency pairs. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.